All right, what is up, everybody? Let's take a look here at a few stocks for Mark. Remember, I'm short-term trader, and so my time frames are intraday to a few days out or a couple weeks max. Okay, so whatever I tell you is just based on that perception. Okay, so HSGX. The first thing to note, obviously, is the overall trend. This is the weekly chart. As you can see, this is just straight down. So if you're looking for a long, you're trading against the current. Not that you can definitely make counter trend trades, but basically, what is the market saying? We don't like this turd. In a nutshell. Okay, doesn't mean you cannot profit from this. Okay, as long as it gives a proper setup and you apply all your risk management rules. But I wouldn't necessarily take it as a long-term trade, and that's just me personally. You have a declining 200-day moving average for your, for the granddaddy of all the moving averages. You got a declining 20 SMA, 13 EMA. That basically confirms the overall downtrend. Let me take a look here at the daily chart. I do like the pattern here for a trade. We have some nice volume on this pop on this day here. Now it did sell off. Let me change this. And we have 3 days of consolidation, not consolidation, more of a pullback and on declining volume. Then we have a recovery here. So when I see something like this on the daily, it'll get my attention, because usually what happens with these stocks that are trending down is, they get shorted often. So there's usually a high short interest on these. So let me take a look at Finvis, take a look at some information on the float, etc. One of the things to note here is the gap risk here. You can see the stock tends to have massive gaps in price, so this would be a high risk trade. So not only does it have an ugly chart, it's downtrending, it's a gapper, it gaps down. So you increase your risk. Your odds are on the long side are diminished drastically, in my personal opinion. So, but again, that doesn't mean you cannot make money from it on the long side. You just have to be strict with your risk management. This is not something that you want to hold and see if it recovers. You assume it won't recover, and then you move on. Because you may look at it here, 23 cents, and that may look attractive. How much lower can it go? But what if it gaps down to 10 cents? You've lost more than half your investment in there. On a gap down. So that's one thing to note. It's high risk. So we have 95 million on 88 million on the float. Short ratio, let's see, it's a very small float ratio. Nothing to write home about. Healthcare stock, biotech. So usually you see this a lot with biotech stocks, pharmaceuticals, and bios and pharmas. It's a whole different ball game. You take a lot of risk on those. So if I am going to trade something like this, it would just be intraday for a quick day trade, and that's it. To me, the story behind it doesn't matter. The chart already tells me all I need to know, and that's basically that it's where the overall trend is. So let's go back to the hourly. And this is the hourly chart. I do like what I see here as far as for a quick day trade. I would be interested to see. I would put it on watch, so I'll add it to my watch list. And I want to see how it moves around this level here. I want to see what it does when it clears that. Now, you got to take note that the range on this is very small, but you know, going back on the chart, it has popped. This is probably just something I'll watch to see what it does, but I more than likely won't take it. It's just not a productive trade for me. So let's move on to the next one, which is PHVAF. And let's take a look at the weekly. I like to step back and look at the overall, the big picture. So there's not much history on this one. Okay. As you can see, the trend is down. It looks like it has set some support in. It's got a very small range. I mean, this is the weekly. This is the weekly chart, and as you can see, range-wise on this, I mean, you're talking 10 cents on a whole week, roughly. If you look at the top of each, the top and bottom of a candle, you get an idea, you know, especially on your biggest candles, you get an idea of the range. So this is roughly a 6 to 7 to 10 cent mover. We can confirm that by looking at the daily. And on the daily, we see the same thing. You know, this candle, for example, the range on that, we're talking bottom of the candle here, 0.63 to 74, so roughly 10 cents. Let's take a look at this red candle here. The high 77, low 65, roughly. So yeah, it's got a small range for what we look for. There's just not a lot of movement going on for us to take advantage of a quick move. So that being said, is there a setup forming here? Let's see. I mean, I do like the price action. Again, there's just not enough room. There's not enough of a range. You'd have to play a lot of shares, you know, a good 20, 30,000, you know, to take advantage of a 10 cent move. But, you know, as far as the setups that I look for, nothing there for me. Where it's going to go, what it's going to do, I have no idea. You know, whatever the story is, you can already assume it's already baked into price. So that's all I can say about this one. I don't really know much about it. Let's take a look at Finviz here. You know, there's this is a over-the-counter stock, so nothing on Finviz there. They don't cover those type of stocks. But you know, could there be a possibility that this stock could move to this and test this dollar area? Yes, there is a possibility of that happening with enough interest. I would like to see this thing consolidate and move sideways through time and test these highs again. But I mean, that's about all I can say. It's not necessarily one that I would look to trade. So moving on to the next one. ALYI. This is also another over-the-counter stock. You know, one of the first things that I note is every pop sells right off. If you take a look there, take a look here, take a look here. Lots of wicks. There. Here's another one. Okay. Every time the stock moves up, sells off. If you're in this stock, what it means is if you're in this stock and you happen to be profitable, you take your gains, no questions asked. Especially considering that this thing can give some big percentage moves. But what do I see here? I don't know. I mean, I don't have much comment on this. Not it's it for me. For me, it's an unproductive trade. Um, I can allocate my funds. Do I want to sit there and hold this thing and hope that it pops someday? Absolutely not. No, not for me. But again, somebody else, there are people that their niche is OTC stocks and they get very good at it. So that doesn't mean that money cannot be made from this stock. All that means is just for me, for my particular style of trading, I don't see anything there for me, and so I mean that's about all I can say here, really. Um, we also got a lot of people underwater just recently. So every time, the more this happens, the more supply it creates for when price starts rising again. So it makes it hard for price to continue upwards because everybody that just got caught in it is going to try to break even. Now, of course, there's exceptions. There are people that will continue to hold and, um, or are willing to take less of a loss. There's all sorts of scenarios, but more often than not, when you see wicks like that, you have individuals that are trapped in a losing position. So let's move on to the next one. All right, we're taking a look at ACB. So again, I'm going to take a look at the yearly chart. We can already see, by the way, this is a very nice setup here on the weekly. And once you get to understand that the price movement is fractal in nature, same price patterns you'll see on weekly charts, you'll find on daily charts. You'll see them on the hourly, on the 15, on the 3-minute, the 5-minute, the 1-minute, etc. Except that the smaller the time frame, the more it is prone to manipulation. Larger time frames always dominate, so just keep that in mind. What I see here, it's a very volatile stock. You have a big double top. Let me delete this here. So what am I looking at here? Now, is this a long-term stock? I don't know. I have no idea where this thing's going to go. The further out you try to gauge where price is going to go, the less accurate you're going to be. So I couldn't tell you because nobody knows. So here's the situation, man. You can see clearly a ton of supply in the $10. See what happens when I was telling you about these peaks earlier is this creates a lot of supply, right? So what happens is when price tries to move up, sure enough, as soon as it broke 10, you got a ton of selling. And you can see the volume here. See the volume bars right there? Right on these two candles. Big volume, okay? So it's usually signals exhaustion. And in fact, this is this is a very emotional crowd. There's a lot of you can see the volume's been increasing and increasing. What it does have going for its 200-day moving average is an upward trajectory. It does the pattern, the current price action. I mean, if we go back from here to here, and again we're looking at a 10-weekly chart. Every week, every candle is 1 week, and so we do have bullish price action there. Going back to the daily, for me, for my particular style of trading, there's nothing here. I'd much rather wait for momentum to come back in, right? Momentum. So this is momentum, right? Than to sit here and take a position on ACB and hope that it goes up, right? And so what happens is if you don't have, and this is what I go back and say, you have to have a strategy. Because if you sit here and, yes, I am going to buy ACB because I think it's going to go up, right? The truth is this could go in any direction, right? Upward, downwards, upwards, sideways, etc. We don't, you don't know that. But the the way that the brain is set to think is sometimes we figure, we start reading articles, we start looking at others' opinions, we start looking at revenues, etc., and we start getting what's called confirmation bias, and we start to think, I think this is a good price to get in, and I think it's going to go up. And so what happens is that if indeed price does start rising, you end up patting yourself in the back because you got a winning trade out of it. But the reality is that you just reinforced the bad behavior because you took a trade with no process. Now, unless your process says buy during consolidation and you've done at least 20, 50 trades and it says, and you show profitability after that sample of trades, 20, 30, 50, then yes, then you continue to do so, obviously. But for me, this never is a productive trade. It just go either way. So what do I think about ACB? Nothing there for me. Much rather wait for momentum to return and trade when there is momentum than just to hope. And so one more here. EGWCF weekly chart. It's in the right place. Not enough information for your 20-day moving average, but there is it's in a nice uptrend. Let's take a look. Balance, Growworks. Let's see what the daily chart shows. See, this is something, I don't know anything about the company, of course, but if you're going to swing trade something, you're going to hold. You want to hold charts that are going in your desired direction. And unfortunately, what a lot of people do is the opposite. They'll try to buy charts that are downtrending, hoping that they catch the bottom. But the thing is trying to catch a bottom is a fool's game. It leads to a net loss overall when you try to guess bottoms. So, but anyways, so yeah, this is not a bad looking chart. I'd say I'd wait for some consolidation, sideways, price action, wait for the 20 SMA to catch up, and either take it at the test or take it at the break of 285 for a short-term trade. And one thing I want to note about OTC stocks, over-the-counter stocks, pink sheets, the OTC market is the ghetto of the stock market. It's the bottom of the barrel. It's usually called the gutter. So those stocks are down there for a reason. Now, that doesn't mean that you cannot be profitable with OTC stocks. You can, and you can make some huge returns on OTC stocks. But again, it comes down to having a strategy that you can execute over and over and over and over again, so that you can let that data show you if you're profitable or not. But if you're, these stocks, these OTC stocks, they're not investment vehicles, man. They're for all the, there's a lot of new people that get drawn to these, and because of the story, they may be, and I've seen it, man. In the past 10 years, I've seen them all. It's going to be the next big solar, or the next at its lowest. It's unproductive. So, like I said, I would like to see this trade sideways. Wait for the 20 SMA to catch up on the daily, and then take a trade either here at the test of the 20 or at the break of 285, buying in at 286. But I don't think it trades enough volume, though, for my type of setup. So sometimes, this is what it traded on on Friday. So sometimes a chart may look really good, but If it doesn't check all my boxes for my strategy, I won't take it. So in this case, I mean, I'd have to check the average daily volume, but the fact that traded this low volume, I need a minimum of 500,000. So, but again, these are just my points of view. Every market participant is gonna have their own view of what price is or what it may be in the future. So, again, this is just